welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 20th, 2024, and we're diving into Palo Alto Networks' fiscal first quarter 2025 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Palo Alto Networks, a leader in the cybersecurity space, and their latest financial performance.
Revenue and profitability overview. Let's start with the top line. Palo Alto Networks reported a revenue of $2.1 billion for the fiscal first quarter of 2025, marking a 14% increase year over year. John, what does this tell us about the company's performance?
This revenue growth is quite impressive, especially in the competitive cybersecurity market. It indicates strong demand for Palo Alto Networks products and services. The company also reported a GAAP net income of $350.7 million, which translates to 99 cents per diluted share. On a non-GAAP basis, the EPS was $1.56, significantly beating the analyst's forecast of 83 cents.
That's a substantial beat. What factors contributed to this strong performance?
The growth in their next-generation security annual recurring revenue, which increased by 40% of $4.5 billion, played a crucial role. This shows that their strategic focus on platformization is paying off, as highlighted by their CEO, Nikesh Arora.
Strategic initiatives and market position. John, you mentioned the next-generation Security ARR. Can you elaborate on how this fits into Palo Alto Networks' broader strategy?
Absolutely. The next-generation Security ARR is a testament to their successful platformization strategy, which CEO Nikesh Arora emphasized as a game-changer. This approach integrates diverse security solutions into a unified platform, enhancing operational efficiencies and security outcomes. It's a multi-year trend that positions Palo Alto Networks as a leader in the cybersecurity landscape.
How does this strategy impact their market position?
It strengthens their competitive edge by offering comprehensive solutions that address evolving security threats. This not only attracts new customers, but also retains existing ones, driving sustainable growth.
Financial outlook and guidance. Looking ahead, what guidance has Palo Alto Networks provided for the next quarter and the full fiscal year?
For the fiscal second quarter of 2025, they expect revenue between $2.22 billion and $2.25 billion, with a non-GAAP EPS ranging from 154 to 156. For the full fiscal year, they anticipate revenue between $9.2 billion and $9.7 billion. Additionally, they've announced a 2-for-1 stock split, which could make their shares more accessible to a broader range of investors.
That's quite a positive outlook. What does this mean for investors?
The guidance reflects confidence in their growth trajectory and strategic initiatives. The stock split is also a positive signal, potentially increasing liquidity and attracting more retail investors.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How is Palo Alto Networks managing its operations to support this growth?
The company reported a non-GAAP operating margin of 28.8%, up from 28.2% last year, indicating improved operational efficiencies. They've invested heavily in R&D, with expenditures reaching $480.4 million, which supports their innovation and platformization strategy. CFO Dipak Golechha mentioned raising their guidance, reflecting confidence in their operational capabilities and market position.
What can we expect from Palo Alto Networks moving forward?
With a strong focus on innovation and strategic investments, Palo Alto Networks is well-positioned to capitalize on the growing demand for cybersecurity solutions. Their robust free cash flow margin guidance of 37% to 38% further underscores their financial strength and ability to invest in future growth.
Key takeaways. As we wrap up, let's summarize Palo Alto Networks' performance and investment prospects. John, what are the key takeaways?
Palo Alto Networks delivered strong financial results with a 14% revenue growth to $2.1 billion and a non-GAAP EPS of 156 cents, significantly beating the forecast. Their next-generation security ARR grew by 40% to $4.5 billion, highlighting the success of their platformization strategy. The upcoming 2-for-1 stock split is also a positive development for investors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Palo Alto Networks' performance in the comments below.